Hi, I'm Scott Mentzer with Orchard Hill Mortgage, and I'd like to welcome you to the weekly mortgage forecast. So let's jump right in and talk about what's going on in the mortgage market right now. And last week, mortgage rates did move a little bit higher. They're over 7%, and right now, as of today, the national average for the mortgage rate is 7.16%. So it's the highest they've been in over a decade, and they could be a little volatile this week. We should expect them to move up and down and fluctuate each day, and there's a few factors that are causing that, and the biggest one is the Fed. The Fed is preparing for their meeting next week, and they're in their blackout silent mode, and so they can't talk to the public, they can't have press conferences, the chairs can't talk to anybody as they get ready for next week's meeting. It's speculated that they will raise their market rate to 0.75% again, and we'll know that next week. So what else is affecting rates right now? There's some big reports that are coming out this week. We had the Treasury auctions on Tuesday. We have consumer confidence report, durable goods, and the big one that's going to affect the markets this week is Friday's PCE inflation report. And that one is really, economists are expecting that the inflation rate's going to move higher, and it's not going down. And that most likely will cause our rates to continue to rise. Some other things affecting rates are the overseas markets. The European Central Bank and the Bank of Japan have been working hard to curb their inflation. They have inflation in the double digits, and that, whatever they do, is going to affect the U.S. economy and trickle down to the markets here. So that's a big one to keep watching. So what is my advice for buyers, or what are some things that they can do to help with their mortgage payment so they can still get into a house right now? Well, I talked about this last week, the 2-1 buy down, and that's a temporary fix for 2 years that can lower their mortgage rate. If you have questions about that, give me a call, email me, and I will discuss it with you. They can also do a rate buy down with points. This is the more traditional method. They can lower their rate by percentage point. They can do an eighth, a quarter, a half, whatever they like. They're going to pay points on the cost of their mortgage. So it could be anywhere from a couple $1,000s to $10,000 or $15,000 on the size of their mortgage, but it would be for the life of the loan. So it's a way to get them into a lower rate right now and into a house. They can always ask with seller credits to help towards closing costs. So that seller credit could be used for the buy down, or it could be used to pay for points. And then the last way that our buyers can lower their mortgage payment is with a higher down payment. So, again, if your buyers have questions or you as an agent have a question, give me a call, and I can, talk to your buyer. I can talk to you, look at their scenario, and figure out what's the best way to get them into a mortgage and a home at this time. So again, Scott Mentzer, Orchard Hill Mortgage. Have a great week. Thanks for watching.